Good morning. Good morning. Thank you, everyone, for joining us. We are here with a special edition of the Daily Bread. You can tell we're in a different location. We're coming to you live from northern Michigan, actually. So we're ready to talk options wherever we're at. But before I totally get into it today and take a look at the markets here with Harvested Financial, I will just remind everyone that what you listen to here does not constitute financial advice, that nothing in this presentation is considered an offer to buy or sell securities or a solicitation for the purchase of any investment product. These videos are purely for the purposes of education, and Harvested Financial uses multiple different methods of analysis throughout its security selection that are not discussed in their entirety here. However, we encourage you to check out our website, harvestedfinancial.com. You can view more disclosures there, and you can check out all of our different services and offerings. Remember also to check us out on Twitter at harvested_DAFE, because derivatives are for everyone. So thank you for joining us. We here are going to look at the market. So I am just going to share my screen in 1 second. But looks like the market has drifted up today. So, we're up a couple percentage, a couple basis points, I should say, sorry, about 80 in SPY. And there we go. So we are looking up about 65 basis points in the SPY. IWM is up 90 basis points, and the Qs are up 95 basis points. So drift up today on Tuesday morning. The VIX is in a couple points. But today, what I'm going to look at is IWM, which is a name that we do offer our model portfolios on, but I haven't talked about in the Daily Bread in a little bit. But this index has just been blowing up. If you've been following the growth to value rotation that we've been talking about in some of our different spots with NASDAQ Trade Talks and on Options Brew, we have been talking about this value rotation that is happening, where there is a little bit of a dampening of some of the tech names and a sort of switch towards value. That comes with a lot of the political tailwinds as we see some transitions in the White House. But over the last month, IWM up 9%. So I am going to actually pull up IWM here and talk about how you can play this continued movement and motion and rotation. And I'm going to do that with a little bit of two defined risk trades. So I'm going to look a little bit on the downside to buy a put spread, and then I'm going to look to the downside to sell a put spread and use that to finance buying a call spread on the upside. So one of the ways I like to think about options and to think about where you want to look for your edge and where you want to find the trade is if you think something is going to differ from the current pricing. So the options markets are an incredibly efficient place where millions of trades are happening every day to determine efficient pricing. However, if you think something's going to continue, something might be different than the consensus, not necessarily the consensus, but the sort of efficient markets consensus, we're going to go for a difference here. And we're going to look at IWM, and I'm going to pull up some near-term options, and I am going to look at the end of February, 38 days out. I'm sorry, the serial expiration, Feb 19th, 31 days out. And what I'm going to do is I'm selling this put spread to finance buying a call spread because I think this rotation is going to continue. So if I look, IWM, we're trading around 213 right now. If I look to sell something to the downside, so I'm going to go, a little bit to the downside, I'm going to sell this $3, and I'm going to go down, I'm going to do a 10 strike vertical. So I'm going to collect about $1.70 on this trade. So 10-point vertical, collecting about $1.70, that's a 30 delta. But if I think, give myself a little bit of cushion on the downside, but now I'm going to look to buy something that I can pay around $1.70 to lean into this trade continuing going forward. So if I want to look just to the upside, let's take another 10 points. So my sort of risk reward is about the same, risking $10 a contract on the downside to make $10 on the upside. But I can get some of that near term, we're at 213 right now, from 215 up to 225. If I'm buying this call spread, that's going to cost me about $2 to get into this trade. So that's a near-term debit that I'm going to pay to finance by downside and buying this near-term upside 10-point vertical also. If I want to go for a similar trade but a slightly different, cost neutral, I can pull that up to the 220 And if I go the 220 to the 225, slightly different risk reward, but that would be a cost neutral trade. So that's going to be a $5 gain to the upside, a little further out of the money, but that's how much you need to actually get that risk neutral. So, sort of the cost of the call spreads there. Anyway, thank you for joining us. Interesting trade here in IWM. We're here every day talking about trade ideas, talking about how to look at different movements in the markets and how to capitalize on them. So, like I said, check us out on Twitter also at harvested_DAFE because derivatives are for everyone. And you will see us again here tomorrow.